Hi everybody, Andrew Mitchum here, the Forex Trading Coach. Today's Friday the 31st of August and welcome along. It's been an interesting week and it's actually been quite a mixed week, not a particularly easy week for trading. Not been too many news events, but at the end of the week there's been the Jackson Hole meeting in the States and that's going on right now as I speak. And that's actually thrown me personally out of a couple of trades that I was in. This time yesterday I was long on the Euro US dollar, the Pound US dollar and the Pound Yen. All three were looking really good heading into the European session. And then as the US session kicked in, the three trades were stopped out as all of a sudden the strength came back into the US dollar. And like I mentioned last week, you know, that's the way that trading happens. You've got to take those losses. At the time they looked really good trades, so I took them. I saw no reason not to take them. I saw no reason to close them early or anything like that. And so really that is part of trading, and it's something that as traders we need to accept those losses. The setups at the time I took them look good in my opinion. And so it also stresses an important point that high risk to reward trading is really important. So I'm talking about trying to get a 2 or 3 to 1 risk to reward. It also means that a low risk per trade is also important. 3 trades went wrong yesterday. Not great, I'm not pleased with it, but it's not a big dent into my account. And so by having that controlled risk, whatever your tolerance might be, whether it's 0.5% per trade or a quarter or even 1% per trade, whatever it is that you're comfortable with, and it's important to stick with that level all the time. For me on those trades yesterday, I was trading because they were daily chart trades, 0.5%. So I lost nearly 1.5%. I had a couple smaller gains through part positions that were entered at the market, but the retracement trades, all three, got stopped at. Luckily I've made up for that on some of the shorter time frame trades, and right now behind me here I have a sell position on the Australian dollar, Japanese yen that got put in today, Friday, and that's a short position and that's looking really good right now, not too far away from profit. So if that has a 2.5 risk to reward, which it does, it's going to more than make up a lot of yesterday's losses. So that's what I mean about high risk to reward and low risk per trade. On the longer term, the silver that I mentioned last week, that's come back a little bit. It got to about 31.25 earlier in the week. It's come back slightly, but that's fine. It's a longer term buy and hold position that I'm having there. I took a short position on gold and that was a really good trade. Interesting though that because I took a short on gold and I'm long on silver, because they're taken on 2 completely different time frame charts, that is possible to be long on one and short on another, even though they're 2 highly correlated trades. With the shorter time frame trades, there's not been a huge amount this week. Like I mentioned, the Jackson Hole event on in the States has been quite a big news event, which has just kept the trading quite thin. Really, like I mentioned, the US was looking quite weak yesterday and all of a sudden it crashed, or the currency pairs crashed and the US strengthened. The Aussie and the Kiwi have been particularly weak all week long, and there's been some good opportunities to go short on the Aussie US dollar and the Aussie yen, same with the New Zealand dollar. So that really summarises the week. As we head into September, I'll be anticipating some more price action as the European and the Northern American markets come back into play after their main summer holidays. So wishing you a great weekend and a fantastic trading week heading into September.